Good evening everyone and welcome to session recap. So this is our first session recap after mini holiday, summer holiday, and I hope that you enjoy the sun. But now it's time to get back to work. And thanks for your support, thanks for your tweets, for your messages. Bob, Emre, and all other guys, thanks a lot. And well, as you know, I don't particularly like to trade during summer, especially during August. That is really a month that has no big liquidity. Most institutional traders are also out of the game. There are a lot of bank holidays going on, and you know, usually you will see some whipsaw movement during August particularly. So when I say summer, I don't necessarily mean June and July, because even during June and July you still can trade and you can still make money. But probably you notice that during August price tends to move in erratic manner, and there is a chance that you might experience more losses than profits. So because of that, usually I don't recommend trading during August. So maybe you traded, maybe you didn't, but even if you did, if you made some profits, that's good. Sometimes I always say that not having a position in the market equals to having a profitable position. So even if you didn't trade anything, well, it's still good. Probably you have protected your profits. A good question that Emre is asking, can we say that the market is not in holiday mode? Is it normal? Guys, on Sunday, so next Sunday, I will publish a blog named Don't Be Scared, Get Prepared. And I will explain in the blog article some facts about volatility and normal market movement. So we are still in a bit of holiday trading mode, because today, as you can see, there is a bank holiday in USA, and well, we are still in some mode of holiday. But I expect market to get back into normal movement in next couple of days, and definitely during next week. So we still can try to spot some setups. Well, as you know, institutional traders will get back to trading, retail traders also, companies will start to work because it's end of holidays, and all these things that move the market will get back in a normal mode, and we will be able to trade normally again. At this point, trading is a bit subdued, but starting from tomorrow and especially from next week, I expect it to be normal. Okay, so before we begin, as always, read disclaimer. This states that online education materials are developed by Admiral Markets Estonia for a global audience. So please take into consideration that the information in this session is not suitable for everyone. So Admiral Markets UK Ltd takes no responsibility. This is solely my opinion, and this webinar is for informational and educational purposes only. Risk disclosure statement stating all possible risks associated with Forex market. By accepting the risk, you're also proceeding further with me. And here, rules and setups. Well, this is what we should always follow on our session recap trades. Give price a breathing room, guys. Don't hesitate to enter within a normal buffer zone, 15 pips of the predicted level. Usually, if it agrees, of course, with your system, we call it always point of confluence or so-called buffer zone. Also, guys, you can use scaling in if you wish. Scaling in is a good way to actively manage your trade, but don't forget that you do your own trade and money management. Scaling in is a trick that I showed you how to enter within a deeper retracement of the market, and also how you can actively be involved in a trade by dividing your positions. But I simply cannot tell you which kind of risk you should use, because you always do your own trade and money management. I can recommend you, so if you follow my recommendation, you should be safe. But for some people, usually, especially if the account is a bit lower, that they might trade with a bit of high risk. Respect your stop loss. Always respect your stop loss. Don't be confused with, especially if you're a new trader, with all these articles that are saying that stop loss is actually meant to kill your trades. The thing is, stop losses are a necessity, especially because it stops your further loss and keeps you within your risk threshold. Add a spread to your stop loss. Even if you trade via ECN account, add 2 to 5 pips depending on the pair traded. We take only one position per listed pair, okay? Either positional or alternative trade, whichever hits first. First touch of the zone is the most profitable. That's why we need to focus on the first touch. That is why I say if you are able to trade that first rejection or the bounce in the zone, that will make you pips usually 80 to 90% of the time, because that is when now moment buyers or sellers are aligned with historical buyers and sellers and with other price action confluence tools. Alternative trades are counter trend trades, breakout trades, scalp trades can be traded independently of any position. So if you are in a breakout trade, or if you are in a positional trade and you want to trade a breakout or scalp, you can do it no matter of your primary trade setup. Session recap setups are valid for today, tomorrow, and sometimes the day after tomorrow. Depending on time and volatility, we use profit stop after 20 pips, not less. So I recommend profit stop. You know how to protect at least 20 pips of profit. Now, if you see that market is really taking a U-turn against your position, then you can even stop it below 20 pips. Of course, profit is profit. We don't know what will be. We are making predictions, and I'm giving you levels where to react. Okay? So if you notice that the market is getting really is going versus your trade, against your trade, then stop it, even if it's 20 pips, a little bit below 20 pips. But usually you will be able to get at least 20 pips. Scalp trades should be done at or very close to important support resistance levels. All those trades are calculated by historical levels and Camarilla. Add these levels to your system, pay attention to trend, so you might find other trend-based entries. So it means that, for example, if we missed our entry for a couple of pips, but you see that the trend is still in our direction, then you can opt for another entry based maybe on your system. But the general trend should be followed. And the term pips pool is the maximum available number of pips that you could have got made on recap entries. Now, we will not be reviewing our past recap because this is our new season. So new season has started, so this is our first setup, and well, we can proceed. Now, if you follow also Forex Empire website, I think I did an exclusive analysis. They usually ask us to provide exclusive analysis to them, and I provided an early morning analysis with the euro-dollar setup, and effectively, I don't know how many of you actually follow Forex Empire. The only day that I do the exclusive analysis is actually Monday. So on Monday, you will probably see euro-dollar on Forex Empire, and on Admiral Markets website, it will be a different pair. So euro-dollar, this is what I did. with my analysis, and basically this is what I still see. I wrote early morning that euro dollar should be sold around 12.10, stop loss 12.55, target is 11.10. Well, if you were watching the price, you could have noticed that actually the price went to 1180 something, and then it dropped for some 40-50 pips. So that is another confirmation for me that the price is still a little bit rangy. So we should see it follow up soon, follow with good volatility and momentum. But of course, we still need to wait for probably a couple of more days. Maybe tomorrow things will get back in normal. So as you can see here, euro dollar is ranging. Ilya is asking, is this recap or the new setup for this week? Ilya, this is new setup simply because we will not be reviewing those previous trades. So these are new trades. So euro dollar is ranging, position sell at 12.10, stop loss is 12.55, TP is 11.10, possible breakout sell 1.1110, TP 10.45, TP2 10.20, possible breakout buy, guys, 12.50, TP 12.92, TP2 1.1340. Alternative buy 10.20, stop loss 1.0985, TP is 1.1110. Now I will show you why I think that it could happen like this. So okay, this is it. So first of all, euro dollar, as you can see, has made a M pattern here, guys. This is no brainer for all of you who trade price action. So if you wanted to trade something during August, this could have been a good setup for you. You know that I really like those no-brainer patterns, and this was a no-brainer here. M, you see, it's perfect M actually here, because you see that there is almost a double bottom. If you watch this was a double bottom, this was a fake breakout, M, and then it was sold heavily. So 1240, exactly this candle is providing us with a interim resistance. The height of this candle is 1251, and you can see actually that this candle is now an interim resistance. As you can see, now pay attention to a couple of previous days. You can see that price is ranging up, down, up, down, up, down. So what I think is that euro dollar could be sold. This is POC point, very clear POC for me here, around 12.10. So actually you see there is EMA 89, H3 short. Now if this is retracement, probably the retracement has started from this 4-hour candle. So if you pull a Fibonacci tool, we can see a perfect 50, even 61.8 at our POC zone that is clearly defined by these confluence points. So that is why I think that 12.10 can be sell, 12.55 is a stop loss, and target is 1.1110. 1.1110 is actually L3 weekly pivot point on our Camarilla. So I think if the price continues to drop, it should gravitate towards L3 pivot point, because L3 is a weekly, and also we have a small trend line here that you can actually see it here. So if this tends to, I mean, guys, as I say, you could have seen that the price started to drop from here. So I hope that it will come back again and give us a trade entry. But if you don't see it coming, if you don't see that it happens, well, just follow your own system and follow your own rules and mark the final target around 10.20. Because if it starts to follow up without giving us a trade entry, because you see market is really slow, and those bank holidays are keeping me from making well, 90% maybe accurate prediction. But what I can say is that you should just keep watching the charts regularly. So if we don't see a spike and drop from 1210, because we already see something similar in this low volatility movement that price has come to 1190 almost and then dropped. So now I need to think, is this my POC point in low volatility environment, or there is another chance that the price will get to 1210 and start to reject? If the first case is the reason, then we are already witnessing a drop from my predicted level that I did in the early morning, okay, with Forex Empire analysis. So I'm still contemplating about it. It's low volatility. We had 1.1190. So is this my POC point? Has it already been hit? That is what I cannot come to a final decision. I can make a final decision, guys. Simply because it's bank holiday, and I really don't like to trade and think during bank holidays. There is no one defending these levels at the moment. Only some orders, right? So institutional traders will be back tomorrow. We will see. If we see a drop from here, then great. But if we don't see, watch your own systems and watch 1120. That could be a target. Also, guys, if you see that price is breaking through 1.1110, this is another breakout setup towards 1045, guys. Okay, so yeah, this will be an interim support around 1085, so pay attention to it. But here we have L5, that is 1027, and here when you mark this line, you see it's 1045, 46. So this will be your final target for a breakout trade. Now, if you see that price is going below 1.10, well, stop loss, it depends, of course, what hourly candle will tell us. So what I would like to do, I would put a stop loss plus 2 or 3 pips above last candle high. So that is where I would put a stop loss. Yeah. So something like, well, 2-3 pips above, no, 2-3 pips, 7 to 8 pips above last 1 hour candle prior to break out of 1.1110. Ilya is saying that he gained today shorting ODN on 4-hour candle. In Asia there was no bank holiday. Yes, as I was telling you guys, just follow Nikkei and trade ODN or pound yen during Asia session and you should be fine. Yeah. Ilya is saying short according to price action trading school. I am very interested to know, Ilya, which kind of short according to price action trading school. Very glad to hear that. But weak, yeah, weak. Great. Of course, guys. You know, a lot of people would tell you that wicks are not important, but you know, you're my students and you know how to trade and you know that wicks are more important than bodies. I mean, no offense to Steve Nissen, no offense to all other price action analysts and traders. This is solely my opinion, guys. And I still I'm thinking, and I really do think that wicks are more important than bodies, because that is now moment. That is now moment versus history. Well done, Ilya. So that is it, guys. So we see now a possible retracement. Whether we will see 1200 rejection or breakout of 1.1110, it remains to be seen. Okay, so let's wait for it. And of course, guys, alternative buy should come at weekly L5. That should be a strong weekly support. Guys, you see, strong weekly support L5. You see a lot of rejections here. Price was hesitant to break down. Then after it broke down, it immediately was rejected. You see a lot of historical buyers there. So 10.20 is level to buy. Okay, so that is about euro dollar. Now we can actually move to pound dollar. So this is euro dollar. And now pound dollar. Well, at this point, pound dollar is in uptrend. I am sure that many of you actually saw my analysis today on admiralmarkets.com about pound dollar longs, and as soon as I published the analysis, well, the timing was perfect. It instantly gave 50 pips. Literally, guys. As soon as I press upload the analysis, it almost instantly went 50 pips in profit. I hope that some of you, I mean not instantly, but maybe 1 or 2 minutes after my analysis, it spiked up. So I hope that you actually made some profits, that you had the time to read through my analysis and make some profits. Now I haven't changed anything from today's analysis. The only thing is we are already in a sort of long trade, so maybe you should protect it, guys. If you followed my analysis, you should have been like 10 pips in profit. I know the problem is it's a bank holiday, so there is no movement. And next major session is Asian session, it's Tokyo session, so I don't know what will happen with my trade. But here, guys, if you saw this analysis, pound dollar is ready to take off. So at the time I published the analysis, the price was 33.28 here, and it literally hit H3 Camarilla. Yeah, this is weekly pivot point, and it rejected. So it immediately spiked off from this 33.28. I mean, that was a rejection from POC here, but when I published the analysis, the price was here, and it spiked here and then dropped. So the only way I can see a continuation of longs I'm very clear with this, really. The only way I see continuation with pound dollar longs is if the price closed above 33.70, let's say. We need 4-hour close, guys, or strong 1-hour Marubozu candle. That is the only way where we can see 34-ish levels. So only if we see a 4-hour close or strong 1-hour momentum candle. Until then, you see, I told you that you can go long around POC point, and I also tweeted today that price is standing at POC. So if you read between the lines, that means, and that meant that you should have gone along. I cannot tell you guys direct advice on Twitter. I'm not allowed to do that. But just read between the lines. I said the price is at POC. Translated to Forex terms, it means you can go long now, right? So if you already took the trade, you should be in a profit. But now it's very hard for me to say that you should buy it now. The only problem is bank holidays. If we were in a normal trading mode, I would say, guys, probably yes, with a low risk, then wait, because guys, you want to make entries at or during major market open. London, New York, Tokyo. Those are major markets. Wellington is not a major market, but you can try. Now it's end of day, guys. And still no momentum because US is on holiday. So guys, what you should do, I really don't know. If you're in a trade, what I would do now, I already closed my long trade because I was already long when I published the analysis. So I didn't trade it afterward. But if I were you, I would protect my trade. Or I would maybe wait for a little bit more to the downside and then, but only if it happens during Tokyo session. Bank holidays are simply bad for making any trades, especially on end of day trading. So the only way we could have traded today is actually during London session. Everything after London was just a waste of time. Yeah, once it profit, protect it by moving a stop loss. That is what Ilya is saying, and I can agree. So guys, if you're in profit, you should protect it by moving stop loss. I have noticed many times that if I forget to move my stop loss and I see that market might start to reverse, instead of making 30-40 pips of profit, sometimes it can be even a stop loss. So market is volatile. It's not like it used to be 10 years ago, but it's good because you still can scale out. You still can put a stop loss to break even. You still can put a profit stop. Okay, so there is a lot of ways how to manage the trade. Yeah, and actually, well, that is good. Ilya is saying he made good profit, so that's it, guys. About the pound, so this is it, what I see. Yes, guys. Yes, this is a sorry, this is not meant to be. This is actually 30, not 32.40, of course. It's 33. Well, let me show you on the chart, and then I will correct the slide. So pound dollar, guys, on pound dollar, actually 33.70. Yeah, this was a typo, definitely. 33.70, but this is a buffer zone here. 33.50 is your entry for short trades. 33.90 could be now a possible buffer zone. Sorry, stop loss, but this is buffer zone, 50 to 70. So this slide will read differently now. Okay, so only, guys, only short if there is no strong momentum. So that is what I will write now. I will write it immediately. So pound dollar sell is 33.70. Stop loss, sorry, it's 33.50. Stop loss is 33.75, and TP is 131.50. Now position breakout. Let me just write it down so you will see. So this is alternative, this is position breakout 133.75, stop loss last high H1 low, and TP 130, TP2 134.40. So yeah, guys, now I will show you. Yeah, no change in the slide because I am typing it, correcting typos, and now you can see. Okay, so yeah, this is it. So guys, the only way to sell is sell 33.50, stop loss 33.75, TP 31.50. So that is the only way we could short this. Okay, above 33.75, actually we can see that the price can break out, according to my analysis, to, again, typo, 33.92. Yeah, I was typing, but I will correct it now. So TP is 33.92, TP2 34.40. Buy trade around 1.2990, guys. 29.90 is a buy trade. I know you might say it's a way long, but still, guys, if you're in a trade that I give you today, you should stay and protect your profits. Okay, that is that you should stay. But if you want to place a new trade, then the only way we can try to find a good long setup will be around this level here, okay? And you can see why. A lot of buying in the history. This was a master candle here, and you can see it's a weekly pivot point, and it should provide a good, possibly no-brainer trade. So if we see something strange, let's say strange, I mean, if we see something extraordinary that pound has been heavily sold into because it's start of September and the end of summer trading, then I think this could be a good place to go long. I'm not saying it will happen, but you see, according to history, this level should really give you good profits if it's reached. If it's not reached, guys, pay attention to my analysis. Okay, please pay attention to my analysis, and you can opt for a fresh long around 3000, but have in mind that your stop loss should be around 50 pips. Well, yeah, sorry guys, not 300. This is actually 3300 with stop loss at 32.50, like this. Okay, so yes, I will type it again, okay, and you will be able to see. So 1.3300, 32.50 for interim longs, but it's up to you guys, because you should have already been in this trade, okay? You should have been already in this trade if you read the analysis. So I will type it like this: analysis 1.3300, 1.3250 TP, watch for breakout. Okay, so this is it, and let's see now. Okay, so this is the slide for pound dollar. Now if you're in a trade, well guys, try to, then maybe you can try with a low risk to enter around 3300 if you missed my analysis. Derek is asking why not on 1.3050? Because the only way I would go long now is actually on a deeper retracement or on the breakout. Because if we see a breakout of 33.75 and 4-hour close, and the price goes to 34 something, then I will know that 33.75 is actually a support. So that is what you really need to pay attention to. Once resistance is broken and retested, it will become support. So this is the strong level, and well, it still can sell. Okay guys, it still can sell from 33.50. That is the range. I didn't come randomly with this. This is what market is giving us. First we had summer, then we are in a holiday today, so this is the range. It is an uptrend, but it's still in a way of range, so pay attention to this. Same with Australian dollar. Sell 76.20, 76.60 stop, 75.40 TP, buy 75.25, 74.85 stop, TP 76, 20. So this is actually, now I will open Australian dollar. It's similar thing. It's ranging, but if you watch, this is 4-hour time frame, so just pull a Fibonacci here from this spot. Okay, from this spot to this spot, you will see that, guys, 61.8 historical sellers lie here. So maybe fresh sellers will appear. Yes, you should definitely watch for news. That is why I will put a disclaimer that there will be a strong news, so please pay attention to it. There will be a rate decision, but if you still want to get something from technical perspective, this is where you might consider maybe a scalping or some short trades if you want. So due to RBA decision, well, you should monitor the trade, and if you want to trade, close your position after some profit. But strictly technically speaking, this is technical analysis. This is what we see on the chart, okay? So sell 76.20, buy 75, but be careful because there will be a cash rate decision, and well, if there is some surprise, there will be a strong unexpected movement. So take care for this and know that this is resistance now, strong one, and 75.25 here is support. So watch for these levels if you would trade this. Okay, so pay attention to it. Pound yen, again ranging, but we could sell around 138.00, 38.40, stop. 137.20 is a TP. Still, I'm saying the situation is a little bit unclear because of holidays, but on pound, yen, so-called dragon, this is, guys, what I see very close to resistance. And this is selling here. See, a lot of selling from this zone here. Well, I think it might be sold from this spot. Okay, so 38 to 38.20 here, and it should proceed down. This is a big spike from this level here. So the price spiked like 700 pips. So we could probably see another fresh sell. But also don't forget that due to a strong uptrend, we could also see a buy trade at 136.85. 136.85. Okay, so that is around this zone here. It's L3, weekly pivot point, and double bottom here. Going to the past, you see a lot of buyers here. So pay attention, guys, to these levels for sell and for a buy trade. Okay, as I'm saying, due to holiday mode, maybe we should lower our targets accordingly, but strictly from full target potential, this is it. But if you see that you're good, like 20-30 pips, take it, guys. Take it knowing that it's still a holiday, and especially today there was a bank holiday. So yes, pound yen is close to resistance, and we could see it selling soon. Dollar CAD is in downtrend. Okay, so dollar trend is in downtrend. Dollar CAD is in downtrend. Sell 1.3000, 3030 is stop. 1.2920 target. possible breakout sell 29.00, 28.40. So I think that dollar CAD will resume with a downtrend. And here it is, guys. As you can see here, you see dollar CAD had strong area here, strong resistance. We had a sell. Now we had another sell. Possibly there will be another sell, especially due to US holidays. So if you see a new US traders kicking in and the price starts to retrace, I assume that they will sell from historically strong resistance, and this is historically strong resistance. So this is what I see. 1.2995 to 30.00 sell potential here, and target could be somewhere around this region here. But also if we possibly see 29.00, have in mind that this could be a breakout for a sell trade. 29.00 is actually L4, very close to L4, but also, guys, pay attention to previous sellers. Okay, this previous low 28.89 actually ignited a new sellers that were all faded, but you see there was a selling for more than 100 pips. So sell from here, it's also L4, sell from here if it spikes, and I don't see any long opportunities currently on dollar CAD. So guys, if you have any questions, you can ask me. I will roll the slides now, and as I say, if you get into a trade or you're still in pound dollar trade, protect your trade because there is a bank holiday and fresh buyers and sellers should appear, and they might spice up our trading. So pay attention to it. So euro dollar, pound dollar, Australian dollar, pound yen, and dollar CAD. The question, how about New Zealand dollar? New Zealand dollar seems like it's being bought on dips, but if you pay a little bit attention, more attention to 4-hour chart, you can see that this is actually a place where it was sold. So if we see a 4-hour close above this candle, we should see next target here. So what would I do is watch for a possible 4-hour close, then zoom into 1 hour and find entries towards this target. If it starts to drop, definitely this is another place to watch for possible long trades and possible long trades here. Yeah, around L3 definitely, and EMA 89. Yeah, 4-hour above this, go towards this. If we drop, go long around this region. For all requests for indicators, guys, send me an email. I cannot send you right now, so just send me an email and I will send it. You know my email. If you don't know, this is my email. So tarantulafx@gmail.com. So for indicators, just send me an email. New Zealand dollar sell. Ilya is saying 73.90. Well, of course, if the price gets here, we should probably see another sell. Yes, but if we see a buy if you see a 4-hour close above 73.40, then you drop into 1-hour time frame and watch for buy trading opportunities towards 73.80-90. Edges is asking, I'm using tablet for trading is there an option to use custom indicators, or will it be the option? I don't know. Probably in the future, maybe, but in the near term future, I'm not sure, because if they had wanted to make Camarilla or custom indicators on the tablet, they would have already done it. So I don't know. We really need to be careful and wait. Next question is, let's see, next question. Thank you, Nenad, for help. Thank you, Emre. Kiwi, yes, this is New Zealand. Dollar, yen, euro, GBP, then euro, New Zealand. Dollar, yen. Yeah, this looks like it's could be bottom dips. But guys, you see, this is actually a strong buying candle. So if we were in a normal trading mode, not holiday, because today you see there is a bank holiday, I would say go long here. But because we are at the end of day, and this is not there is no major session out due to USD holiday, Tokyo could probably reject the price. So I would be paying attention to break out below this candle low towards this region, and so 103.13. If it goes below it, I would definitely be short on dollar yen. Still pay attention to Nikkei and see what it does, because if Nikkei starts to drop, then dollar yen should drop. As always with holiday trading, guys, this might be just a profit-taking candle, I mean a fake candle, so it could start to drop. It's holiday after all, guys. Don't forget about it. As I say, it's holiday after all. Euro, New Zealand, let's see. Euro, New Zealand, I will find it here. This is sell on rallies. As you can see, this is sell on rallies. Euro, New Zealand, well, let's zoom into 1 hour chart. This needs a retracement, and if we take Fibonacci from this towards this, so this is actually a good region to possibly short into. Here, 53.15 and 53.30. This is the region to go short. That is Euro, New Zealand. Euro, GBP. Same thing, guys. Short on rallies. Let's see, I think we have a confluence somewhere around this region. Yeah, definitely. Now I'm doing this very fast. This is fast view, fast analysis. So yeah, definitely here, guys, this is your zone for possible short trades. So yes, this could go short, especially because this level has been broken with a strong momentum, and if it goes below L3 weekly, it should tank even more to the downside. So this is Euro GBP. Do you have any other questions? I don't see any questions. So yeah, let's see what we will get. I hope that this first session recap webinar will be a success. Hardy Dallas is saying no oil. There is oil, so if you want me to do the oil analysis, I can do it. Okay, so here you see there was an unusual spike in oil today. That's why equities went up. And if you follow the price today, as I always, guys, will remind you, bank holidays are always good for market makers. So there is no one to defend those support resistance, and that is why we saw some unusual spike. So this could mean that actually the trend is to the downside, because you have some important trend lines here, and here, guys, the price is still making lower lows and lower highs. So this is a downtrend, and if we follow oil and equities, yen pairs, of course, because equities are correlated with yen very strong, so this is actually a downtrend, and oil and the yen pairs should go down. Yeah. Ilya is saying WTI spike goes because of putting talks with Saudis to reduce output. Well, yes, there is a simple spike out on our charts, but you see here it started to drop. Thanks, Ilya, for information. Well, it was spike up, then it went back into a trend mode. So this is probably sell on rallies. Natural gas, well, there is a gap that is common to natural gas, so I'm not doing this kind of analysis. The only thing what I could say from technical perspective, this could be now the start of a move to close this gap. So technically this is V-shaped reversal. This is technically a common gap, so this could be closed because it's a common gap. New Zealand dollar CAD. Okay, New Zealand dollar CAD. Let's see if there is something to see here. Yeah, this could go up now because this is a very strong support, guys. This is actually support zone. 94.20 to 94.30, 33. See, this is support, so actually this could go up. And where? Well, I would go with probably with this for starters, and on up to this region here. This is the pair that it doesn't have a big movement today. You see there was a drop, and then the price actually up down simply because of bank holiday. So try to wait, be patient, and see if it will jump. It looks like it will towards this region, this where you could probably sell it. So okay, guys, that was it. Let's see if we will make some pips. We had a good pound dollar today, and let's see if we will make some more. Tomorrow I will come with new analysis. Unfortunately, market is not moving due to holidays, but I'm very glad to be back with you. I love you all, and I will see you soon. So cheers, guys, and talk to you soon. Trade safe.